Here we go. We're looking at Amazon. What's our first step?
Chart resistance.
Chart resistance.
We must chart resistance. Yes, that's our first step. You have to chart the resistance. Okay, so we're on our daily chart. I know there's an easier way to take these off, but it's just easy for me just to hit them and delete them. Okay, we go from current price, which is this particular candle, and we go up to where our peak is and turn around. Remember how to chart resistance and support. We go up to the peaks and the valleys. In this case, we have a peak right up here. That's at 109.97. I'm gonna make it bigger so we can see what it is. Some of y'all looking at phones and tablets and maybe looking really small. Okay, let me make it a little bit bigger. Okay, that's our resistance. We went from the current price right here, and we went up to the place where there was a peak. This was the peak. The candle from, I don't remember what day this was, 6 days ago, 1, 2, 3, 4, 5, 6 days ago. 109.97. Okay, what should we pick for our strikes?
Something above 109.97?
Like what?
110.
We can do 110 as our strike, or, you know, we can go with 111 if we want, a little bit of room. We could do 110. Okay, so that's going to be our sell leg. What about our buy leg?
The buy leg, we don't
If we
want
pick
it to go
110 or that, how would we pick for our plus? Our buy leg.
That's gonna be below,
Yeah, the opposite of it.
or below the one. Is it below the 105 or below the 10?
So it's still above. So if we did 110, it would have to be 111.
It would have to be 111 because you got to go up. When you're doing call, cover, call, call credit spreads, you got to go up. Okay, so if we did 111 here, or we could do 112 if we were doing the 111. Okay, so we're going to go to the option chain. We're picking either 110, 111, or we're picking 111, 112. Okay, let's go over there, see what we see. Option chain, we can go out just this week if we want. Just this week. We want to go further, we can do that too. The further out you go in time, the better premiums you get. So you can always adjust. 110, 111, we're going on the call side.
$8.
Or 111, 112, $4. So then you have to ask yourself, actually says $10 once we pick the button. How much money are you leveraging? How much money are you going to have to let the broker block up here?
$80.
How'd you get 80?
Or this
You're not far off. I'm just wondering how you got it.
we have the 8 and the 4 circle.
Oh, okay. That's not how we get there, but I was wondering where you got those numbers from.
Okay.
Let's see. What's the spread?
Okay, well, what is the spread?
How much is the spread?
$1.
So if you have a 1 spread, how much money is that?
100.
Yes. All right. Yay, Miss
Finally.
Jane.
Ding, ding, ding.
Ding,
It's like
ding,
a
ding.
family feud.
Yay.
Get it, somebody get it, somebody get it.
Yes. The spread is 1, so that's $100. Yeah, 1 times 100.
100.
And if we were to pick the 110, it did, when I picked this, it filled with $10 credit. So that happens when you push the button. A $10 credit, that's our premiums, right? Minus the $10 premium. How much money are we gonna have to then block up?
90.
$90. The broker will hold $90 as a deposit while this trade is going. Now, $10 for $100 of collateral is about a 10% return on your money in 1 week. Not bad, not necessarily bad, but you could think, I might want a few more dollars than that. So let's go out another week. Let's go out another week. We're still looking at what, 110, 111 or 111, 112. Okay. Ooh, looks a little bit better now, doesn't it?
Mm-hmm.
Yeah. That 13 and 19.
Looks a little bit better. If you do the 110, 111, the broker is going to reserve. Let me see what happens when we pick this. It may say 21. Yeah, it goes up a little bit. When you pick this, it says that the broker, or that the premium, the premium you're going to get is $21. So how much money is your broker going to block of your buying power?
$79.
$79 is going to be blocked. So this trade with Amazon for 2 weeks, potentially, it expires in 2 weeks, you may close it early, is going to require $79 of collateral while this trade is going. If you decide that's a little too, I want to go out one more, maybe I'd rather go to 111, 112, that's going to take in $15, then you change the numbers a bit. You know, these numbers change to 15. This changes to 15. And this changes to 85. But you have the 111, 112. Now, what's important here? This is what you need to understand. Where does the price need to stay in order for you to win this trade? Where does the price need to stay in order for you to win this trade? If you pick a call credit spread and you pick 110, 111, to win this trade, where does price need to close?
Below that? Below
Yes, below which of these? I don't know if we talked about it yet, but very good. Price must close below the sell leg. Yeah. The 110 is the sell leg, 111 was the buy leg. So price must close below the sell leg of 110. That means we need the price at expiration to be less than 110 in order for you to keep all of those premiums.
So what happens if it is right at 110?
If it's at 110, you're fine.
Still
I mean,
fine.
you do have some room. It's called break even. So whatever you took in, if you took in $15 in premium, then you actually get $110.15 as your break even.
Okay.
So you do have a little bit of room at the 110. Okay. Where the problem comes in, because I don't want to sell it to you like this is always peachy peachy, because sometimes it's ain't. Okay. If to win, the price must close below the sell leg of 110. Then you keep all the premium. You keep the whole $15, right? If price closes above 110, you will have to pay what it's worth at the time. You have to pay what the spread is worth. Okay, so remember we talked about max loss. Okay, let's want to make sure that we're dividing, as Jamie would say, dividing the word of truth properly. We're rightly dividing the word of truth.
Yeah.
Yes. So if the price is above 110, you'll have to pay what the spread is worth at the time. Now, at this, okay, I'm going to make sure I put some good numbers here. Our trade, we took in, this was our trade. We had 110, 111. Let's say we took in, what did we say, that 20, no, was it 20? Yeah, the $21 in premiums. $21 in premium. This is our max profit. We can't make any more than this $21. That's your max profit. Does anyone know what is your max loss? Does anyone know what's your max loss?
Is it what they hold?
Remainder, is it the, that minus 100?
So the max loss is $79 because this is the 100 minus the 21.
Yeah.
That's your max loss. And max loss occurs when price is above 111 at expiration. That means price has gone all the way up above your top leg. You had the 111 here. If price goes through the 110, through the 111, and at expiration, it is above 111, then you will experience max loss. Basically means the broker will keep the $79, trade will be done, and we'll go on to the next thing. If price stops in somewhere in the middle, then you will basically pay what it's worth in the middle, but it won't be max. It won't be $79. It won't be max loss, right? So if price stops, let's say 110.50, right? Then you may pay $50 may be your loss. It's not exact like that. It's not, I'm halfway between these two, so it's $50. It doesn't work quite like that, but there's some place in the middle that it'll be worth if the price is in the middle. It cannot be worth any more. This trade is worth no more than the $79. You can't lose any more than that $79, right? Just like you can't earn any more than this $21. Your max profit is $21. Your max loss, or the most you could lose, is the $79.
Right. What does CCS stand for again?
Call credit spread.
Okay.
Okay. Call credit spread. At any point in this trade, you can buy to close, because when we opened this, we sold to open, right? Sell to open. Any trade, we were selling to start. So at any point in the trade, if you think it's not going to do what you want it to do, it's not looking like it's going to do its thing, then you can buy to close. And basically you pay to exit the trade. That's what happens when you sell to close. You pay to exit the trade. You're like, I'm good on this. I can exit with a partial profit. You can also exit with a partial loss. You can exit these trades whenever you want to exit them. If it's going your way and you say, this is doing what I wanted to do, I'm ready to just take my profits off the table and run, you can do that. If it's not going your way and you're thinking, I don't think this is going to come back down below 110, I can close my trade. You can close it whenever you like.
And when you close it, how much are you paying?
You're going to pay whatever it's worth at the time.
Okay.
Mm-hmm.
So it's all dependent on where.
It depends on where price is. So if the price is moving, it depends on the price, the volume, all the things, but you pay whatever it's worth at the time.
Okay.
But of course, you can adjust. You can put a different number in the limit box if you want something different. And if the price gets to that place that you want it to get to, then it'll pick up the order. If price doesn't get there, then it'll just stay working. Okay, let's do another one. Let's do another, and then we'll talk through what the deal is when it goes well, when it's not going so well. Let's see. I think SPY is a one spread. It is. Let's do a chart. First step, what's our first step?
Find resistance.
Find the resistance.
resistance.
Yeah. Find the resistance. First step, find the resistance. Okay. Y'all see where the resistance is on this little chart?
Is it that little thin candle up there?
The little doji looking thing right up here.
Right here, yeah.
Yep, that's our resistance right there. That is it. Okay, so I'm going to double it up so we can see what we're looking at. This is a red. Okay. Our resistance is at 415.8. What should we pick for our call credit spread strikes?
416 or
Yeah. Or
417.
416 and then what?
417.
416, 417, or something above this, but that we can start right there. Notice you've got some resistance right here. You can see that it's been a resistance placed more than once. So it's okay as far as its ability to hold. We'll see. SPY can do its thing, but at this point, we at least got two places where it went there and reversed. Reverse. Okay.
Shit.
Miss Arlissa, is that
Yeah.
chart that's a day chart or
Yes,
what kind of
ma'am.
chart? Okay.
It's a day chart. See, I'm up here with the D. Yep, we're charting on the day chart. Okay. Then we're looking to the trade. We're going back to the trade screen, looking at our 416, 417. We can look at it now. SPY expires every day. So you can say, I want to do this for tomorrow. I want to do it for the next day. You can look, see what prices work for you. And if you don't like the price, you can push it out a little bit further. Okay, looks like here, if we go out till May the 9th, which is Tuesday, 416, 417 pays $17 for 2 days worth of collateral. So let's talk about this trade. What's our spread?
1.
Okay, one spread, which is how much money?
100.
Okay, one spread, $100. How much is our premiums?
What's that? 17.
Premiums equal $17. How much money are we allowing the broker to block of our collateral?
83.
$83 is going to be blocked. What is our max profit? The maximum we can make on this trade.
What is it? The 100 plus 17? I don't know. Oh, over here.
What's our max profit and what is our max loss?
Wait. Is it the 80? No, 83.
Which one?
Max loss is the 83. The max profit is the 17.
17. You can make no more than $17 on this trade, and you can lose no more than $83 on this trade.
So even if it's like, so the price right now is 412. Wait, right? And let's say it drops to $300.
Okay.
That's all still we can make?
Yep. Once you agreed that I will sell you this for $17, You can't change what you selling it to somebody for. It's like, I got shoes, I want to sell it to you for $17. The person agrees, you can't then change it partway through and go, I wish I had sold it for 35, or I'm coming back now to sell it for $35. I agreed to 17. That's what you get, is the 17. So yeah, and then your max loss. What is the situation? When is the situation, or what is the situation that that in which you keep all your money, and the situation where you don't keep all your money? Tell me the situations where you, what's the place where you will keep all your money?
You'll keep all your money if it doesn't pass the 416.
Okay, if it doesn't pass the 416, you keep all your money. Yes, yes, yes. Okay, so what happens if it does pass the 416?
Then your max loss is the $83.
But it has to get where for max loss? Nothing, babe.
418.
So just above 417. It doesn't have to get all the way to 418, but if it's
Okay.
above 417, then that would be, if it's above 417 at expiration, because of course these are all things that are dependent on at expiration, then this is when, above that is when you will experience max loss.
So it could be 417.01.
Yes.
Okay.
Because your spread was 416 to 417 at expiration. Of course, you could close it before that. Say, reduce your loss. There will be some, if it's between 416 and 417, there will be loss. It doesn't have to be max loss, depending on the time and the location or what it's worth. It doesn't have to be max loss, but it won't be a full profit. Okay, $17, we keep our $17 as long as price is below 416.
So you said you can't change the price, but you can change your expiration date?
You can change it if you roll it. There's something called rolling. If you have a trade and you don't think it's going to work out by your expiration date, you can roll it to another expiration date. So yes, you can.
Is there a fee for that?
The fee is only that you now need to see what is it worth when you roll it. Because if you're rolling a trade at one place, if you roll it up in the dates, the price may be different on the next date you pick. So you could roll it for more money, and sometimes you roll it for where you may have to pay a little bit of money. So the rolling is a whole nother strategy, basically. It's a lot more to rolling. But yes, you can roll it if you decide that it's just not going to do right and I don't want it to close like it is. You can roll it to another date. You can roll to another strike, but that's a whole process. The fee, there is a fee. The fee is the fee from the broker for basically a roll as you close the trade you got and you open another one. So they will charge you the fee in order to open and close a trade. Okay, so if on this particular trade, as long as price is below 416, we're going to make our $17. We get to keep the whole 17. If price goes above 417, we're going to suffer max loss of $83. If price closes somewhere in the middle, we're going to pay somewhere in the middle. All righty. Pay somewhere in the middle. This is one of the things, and Michelle kind of, without saying it, she kind of said it. She's like, what if the price just drops and I'm not going to make any more money? That is one of the things that happens with sellers, because in our minds, in people's mind, you're like, well, what if the thing does what I want it to do? And I could make more money if I was buying. And this could very well be true, right? That could very well be true. But the trade could also go the opposite way than what you wanted to go. And the money you paid to enter a trade could be lost. So it really comes down to, if this had done this before, I would have made a lot more money. Well, it could have ran up and you wouldn't have made as much money. You would have lost all your money. So this is the age-old discussion between sellers and buyers. Of course, sellers are like the insurance company. Like I said, sellers are like the insurance company. You're going to come out ahead more times than you're not. But there will be times everybody's going to take some losses. It could be the price isn't doing what I thought it was going to do. I just need to close my trade. The price isn't doing what I thought it was going to do. I may need to roll it to another place. I just need to close it and open, start again. Or I may need to, be patient and trust my charting. Or I need, maybe I need to go up a little bit higher away from resistance to make sure I've got more of a buffer. These are the things that you fine tune as you're trading. Okay, we want to do another one. I think it's about time for some of y'all to push some buttons.
I don't know. I was over here and I still couldn't push paper mine, and I thought I could spend their money a whole lot easier, but I couldn't do it. I wasn't sure what I was doing. I was like, oh, wait a minute.
Even if you're in the paper account, you can't do anything wrong over there.
That's $2,000. I need to know what's happening. I couldn't do it.
You can't do anything wrong in the paper account.
I just didn't like the look or feel of it.
Okay. Okay, I'm looking at Apple now.
What Apple talking about?
I'm looking at Apple. What's our first step?
Chart resistance.
Chart resistance. Now, what I don't see here is resistance up here just yet. Let's go back to where we can see some. This is current price here. I know it's very small. Current price is right here on this little dot I'm at, right?
So 170 something?
173. Yeah, that's the current price. We need to look over here to see what is, oh goodness, put back to where you were. There we go. If we look back from here, right? So if we look, we're here at current price. If we look back, we can see there's something over here that's in the same general vicinity, right? So we're looking there to see what's going on over there. Let's see if we can get us a resistance area right up in here. I'm going to put it here and then I'll zoom in on that date so we can make sure that we put our chart in a good place. Okay. Let me erase this because we don't need you. Okay, we're looking at our resistance area up here. Let me turn this into something that's a little bit more easy for us to read. Okay. This is where we are for this. There we go. This is our resistance. Our resistance, 176.15. Right? What are we going to do as far as picking strikes?
177, 178.
You could go up there. Above 176. Then you'll start to look though. You can do 177, 178. I'm going to show you though, when you get to the option chain, that the strikes they have may not match exactly what you want. You want above 176. Do you see here? You've got 175 as a choice, which is too low. The next one up is 177.5. So you end up with 177.5/180.
Okay.
Okay. All righty. What spread is this? How much?
50 cents.
177.5, 180. That's not 177.5, 178.
Oh, crap.
The 36,
Not yet. Don't go there yet. What's the amount of the spread?
1.
It's 2.5.
Yeah, 2.5. You take and subtract 180 minus 177.5.
Yeah.
Yep, 2.5. How much money is that?
$250.
200, yes, Miss Jackie, coming on through. $250 is what you're gonna need for collateral. Yeah. If we pick this for this week, this is just for this 1 week. If we pick this, we're going to collect $36. I'm gonna make sure it doesn't become something else when we pick it, because a lot of times it does. Oh, it becomes 37. I think we're fine with 36. Okay, what does the $36 represent?
Your premium or
The
your
premium, yeah. Premium is also our what?
Our max profit.
Max profit, there we go. This is the absolute most you can make from this trade. Take this away, we're gonna end up with what, $214? What does 214 represent?
Max loss.
Max loss. Now, one thing I want to clarify here to make sure, when we enter these trades, you don't spend any money. You don't spend any money, right? You're not paying to enter these trades. Your buying power is blocked for these trades while this trade is going on, but you have not spent any money. Right? This is the difference between buying. When you're a buyer, you decide if the trade costs, in this case, if you were buying this spread, it would be $39. That means you're going to pay $39 on the front side, hoping it does what you want it to do. You're going to spend that money. The broker's going to, it's going to be used. It's not, that's not like a just blocked up. In this case with us, this collateral, the 214, is just blocked by the broker. As soon as if you open this trade and you exit it right away, they're going to release all your buying power. They're going to release that 214. If you go a day and the price moves down enough and you say, okay, I knew I took 36 in, I'm fine with buying it back for 16 and I'll keep the $20 difference, you can do that and all of your buying power gets released. You have not spent any money. Okay, this is the beauty, I think it's the beauty of being a seller, is you don't actually pay any money to trade. The broker does use a deposit, but like if you get a deposit on the rental car or the deposit on the hotel room, now you can't use that money on your credit card because it's been blocked up by the establishment. But as soon as you exit those people's property or give them their car back, they're going to give you your money back. They're going to release your money. You haven't lost any money if all goes the way. If you don't tear their car up or you don't steal their towels, you're going to get your money back. They're going to release your buying power. Same thing happens with these trades. Okay, I don't want you to feel like, I can't do this because they're just going to use my money and I'm going to lose it all. You won't. I mean, at any point in this trade, if price goes up above 177.5 and you decide I want to be done with this, you can buy the close and leave the trade. And all your buying power will be released. They'll go, okay, we're good. You bought back, we're finished. On to the next trade. All right.
Is this a part of the wheel, Miss? Is this a part of the wheel strategy?
No. The wheel
Okay.
includes just covered calls and cash secure puts. Yeah.
Okay.
These are just credit spreads. So when do you keep all of your profits? What price does it have to be at to keep all your profits?
$180.
That high?
no below 177.50.
Below 177.5. Yep, 177. As long as you're below that
The
sell,
lowest price.
you keep all your profits. When would you experience max loss?
If it goes above 180.
If it's above 180,
One.
you experience max loss. At expiration, max loss above 180 at expiration. That's key because it's not just if it goes above 180, because it could go up there and come back.
Come back down.
Right? So it's where we are at expiration. when you get to, and you don't have to wait till expiration to make a move. If the price is doing what you want it to do and price is going down nicely, you want to close the trade off and take part of your profits versus the whole thing, then you close the trade, you buy back, you're finished. If price starts going into your 177.5, 178, you get a little nervous, like, I don't know if that's going to do right. You can buy back and close it then too. You don't have to sit around waiting for, you know, the whole 215 or 214 to be gone. It's up to you. You can close it anytime you want. Anytime you want. I like credit spreads a lot because they take a small amount of capital, right? It allows me to trade a bunch of different stocks at one time. Like if I did, so if you have $500, I could pick 5 different stocks I want to trade and with the one spread, and I could trade 5 different stocks at one time and collect profits on, because you know, you collect your premiums right away. As soon as you enter the trade, they give you the money. I could collect premiums right away on all those trades, do what I'm gonna do with it, close them when I'm ready, you know, and keep it moving. But a $500 allows me to trade, $1,000 allows me to trade a lot of different things. But if you're buying these same things, let's say we were looking at buying Apple. If we were looking at buying an option on Apple, let me go back to the single chain. If you say, well, I could probably just buy and do better, you could possibly. But if you're buying on Apple, you're buying at $270. You're buying a put at 270, 150. So you're buying at a place, and you can't buy necessarily within the week. You honestly should buy out further in time. You shouldn't. Some people do, and that's a whole strategy to buy the same week. But if it's doing what you want it to do, then great. If not, you probably should buy out a little further in time, right? If you're buying a call, you're going to spend $350, $200, $200 or $350 you're going to spend on these trades, and you want them, you hope they do what you want them to do. If you enter this 172.5 for $355, first of all, you're going to pay $355 right off rip. And then you're going to need the price to continue to climb up from 172.5 in order for you to turn into profits. It can't just sit still. Like with selling, the price can just sit still. The price can sit still. The price can go towards our strike a little bit. It can hang out a little bit. But as long as it's not at our strike at expiration, we're keeping our money. We're keeping our money. Okay, like we're looking at Apple right here. If the next day, if on Monday, Apple goes up a little bit, right? Or if it falls back down and goes into this gap and starts going down this way, all we're making, as long as it can do all this stuff right here, it can do all of this, as long as it doesn't go past that, 177.5, which is what we have way up here. As long as it doesn't go past 177.5, our trade is in good shape. We're at 177.5, which is up here. Price can go up a little bit. It can come on back down. It can do its thing. And by the time we get to Friday, as long as it's not at 177.5, we're keeping our whole $36. And the broker's going to release our money, our buying power once the trade is gone. You can turn it off whenever you want. Okay, do we have some people who are ready to push the buttons?
Arlissa,
Sir?
can I just interject something?
You can interject.
This is general thing for the group. When she was asking, is this the same as the wheels strategy? I remember when I was seeing the same things, that's a good eye for her to even notice the similarities.
Mm-hmm.
So just keep in mind on your journey, this is for everybody. This is what I had to learn. On your journey, when it comes to options in general, but selling obviously is included, just remember that everything just boils down to a call and a put.
Real quick, I just wanted to come on. This is Arlissa, Educator to Trader. Wanted to come on and tell you and ask you, I guess, to like and subscribe to the channel. If you like the content that I create and I'm, posting regularly, then go ahead and subscribe. That way you won't miss anything and you can be a part
of all that we're doing here. I'm a coach to sellers. I'm an option sellers coach. If that's a vein that you don't know anything about or you want to know more about, then go ahead, subscribe and check us out all the time. All right. Thank y'all. I appreciate it.